Greetings, fellow traders. I'm Dylan, a research strategist at Pepperstone, presenting the latest weekly update on As Good as Gold. So over the past week, gold prices have actually edged up slightly and then followed a consolidation pattern at a higher level. The market's growing concerns about the U.S. economic situation, geopolitical conflicts, and some political uncertainties have supported gold prices, while the latest higher-than-expected U.S. PPI data has put some pressure on gold. Right now, all eyes are on tonight's U.S. CPI and retail sales data, as any significant deviation from expectations could ramp up gold price volatility and trigger a trend movement. So as usual, let's take a quick peek at the recent gold against U.S. dollar day chart. After a week of narrow consolidation above the $2,300 US dollar mark, gold broke above $2,320 last Thursday, which acted as support in April and resistance in early May. We saw a 1.6% rise on the day, pushing prices to around $2,350. Last Friday, gold climbed above $2,350, reaching a new high since April 26. Since then, prices have actually been consolidating at this level with no clear trend emerging. If the bulls take control, breaking through $2,400 could be crucial for this uptrend to potentially reach new all-time highs. And on the flip side, if the bears dominate, the $2,320 and $2,300 levels might offer some support before any further declines. So gold prices are still in tug of war, basically due to various driving factors on both sides. So now let's break down the reasons supporting its performance. First, there are signs of U.S. economic stagflation. On the one hand, economic data is quite weak, I would say, with the labor market softening and both services and manufacturing PMIs falling in the contraction zone. On the other hand, the New York Fed's one-year consumer inflation expectations jumped from 3% to 3.3%. The latest U.S. PPI for April showed a 0.5% month-on-month increase for both, headline and core figures, which are 0.3 percentage points higher than the previous month, indicating rising inflation. So if we put them all together, leading indicators such as non-farm payrolls and PMIs are weakening, while inflation data remains high, signaling stagflation. Additionally, the increasing U.S. debt burden and May's University of Michigan Consumer Sentiment Index came in at just 67.4, well below the consensus of 76.2. This heightened safe haven sentiment towards U.S. economic conditions is boosting demand for precious metals and supporting gold prices. Second, political and geopolitical risks are playing a role. There are chatters on the street that the Biden administration might just announce tariffs on Chinese goods like electric vehicles this week, and the stance of Europe as a significant EV importer on this is still quite unclear. As the U.S. election approach, these are quite, subtle to me. Meanwhile, military tensions are rising in Rafah and the Russia-Ukraine conflict continues. In such an environment, investors just tend to hold more gold to, hedge against uncertainties, supporting gold prices. Well, although the overall scenario of high inflation and economic slowdown in the U.S. favors gold, the higher-than-expected PPI itself has led the market to push back the Fed's first rate cut to December this year, which objectively pressures gold prices. So in summary, gold prices are currently hovering around $2,350. Increased safe haven sentiment, physical demand, and central bank gold purchases support prices from below, while persistent U.S. inflation further hinders gold's upward movement. However, we should also note that March's PPI saw a significant downward revision. This somewhat eases concerns about the latest PPI data's rise and makes tonight's CPI outcome more unpredictable. Markets' expectations for the U.S. core CPI in April suggest a decrease from the previous month's 0.4% month-on-month growth to 0.3%, while the annual growth rate falling from 3.8% to 3.6%. Given that the CPI has exceeded expectations for 3 straight months, and the Fed is eager to find more confidence to cut rates, a lower than expected result such as month-on-month growth below 0.25% could trigger greater market volatility and push up gold prices. Considering the U.S. economy's heavy reliance on consumption, tonight's retail sales data, expected to show a decrease in month-on-month growth from 0.7% to 0.4%, is also crucial. Cooling consumer spending could support the Fed's consideration of an early rate cut, which would be bullish for gold. So that's pretty much for this week. If you have any thoughts on tonight's US CPI and retail sales data, or just some future trend of gold, feel free to leave a comment below and let's discuss it together. Stay tuned with Pepperstone for more insights and updates. And until then, happy trading!